Good afternoon. This is Chris Robinson, Robinson Ag Marketing, with today's closing grain comments for Thursday, August 21st, 2025. Well, let's get right to it. 21 and three quarter cent off the bottom. What is that? That's D's corn. D's corn hit 413 and three quarters today, spurred on by really good short covering in the bean market. Continued. We saw the funds buy 30,000 last week. Looks like they bought another 30,000 today. So they're probably going to stay short corn, but they're definitely getting flat. Probably going to flip and get long beans, which is good for bean producers. We haven't had much to cheer about in 2025. Um, we got a lot more work to do with December corn, but in a year where we've had a high of 479 and a low of 392, we don't have a whole lot to work with, quite honestly. So it would be nice to see if these corn can go fill that gap from the July 4th weekend low. We'd have to fill that gap. That would come in at about 432. So is there another 20 cents after 21 cents? Sure do hope so. This is why we don't like um, buying one put and selling three calls when we're on a low, because you end up coming up the works. Because if you're long corn, if you're a farmer, you're long corn, why would you want to get in front of a rally? So be careful of that if you've got any of those things on. We'll see if there's legs. But a good day. D's corn finished up 7 3/4 cent at 411 3/4. November beans finished up 20 cents, 1056, and uh, and even 1056. It did trade as high as 1056 and 3/4. If you are a client, if you are a subscriber, you should have gotten an email today from me. I want to use this rally. If we get another 10, 15, 20 cents, we're going to catch up on cash sales. Right now, we're 40% sold of guaranteed bushels at 1055. That's our average. I did have the targets out there. If you're looking for those, give me a call. But we want to be in a situation where we can reward 75-cent dollar rallies, especially when the entire year has been a dollar trading range. So we're getting back towards the top. You don't want to turn your nose up at it. You do want to defend it. And I already talked to a lot of guys today that their basis is terrible and they're going to store it. So all the more reason, if you don't understand or you're not familiar with how to use a put option, or if you want to talk about strategies out there, please give me a call. Okay, Chicago wheat finished the day. Sep wheat finished up a penny and a half. It's really fighting there at that $5 level. December KC finished up 2 3/4. Again, we're holding 521, but as corn goes, so shall wheat go. And wheat is still basically at its 5-year low, fighting off continued sell pressure. Now, what you might see here, what you see lots of times, is people will actually, they'll sell wheat, but they'll buy corn and beans against it. You might see that type of spreading here. Tomorrow's day is going to be very, very important. Why? Well, the Fed's going to talk, and the market is pricing in a rate cut. Why does that matter? If things get out of whack, if the market gets disappointed, it kind of shakes everything up like a big ball of wax. You do have the Dow Jones sitting right there at 45,000. You've got the S&P 500 sitting right there at 6,400. Big psychological round numbers. Again, but if there's any disappointments tomorrow, it could tick off another correction. It's been a while since we've had a correction, since April. And that leads me into what the risk is for cattle. Cattle are very sensitive to what happens in the stock market. Cattle today did finish a hair bit lower after making new highs, finished down almost imperceptibly down 0.125, and October fats 234.725. September feeders could not get through 359. It hit it. Believe it or not, I had some stops working there, and for whatever reason, they did not get filled. Because just for I don't know what the volume was there, but not a lot traded at 359. That's going to be the new level to watch. If we take out 360, what does that do? Well, that opens up the door to another progression higher. 360 opens the door to probably 372, and it's just food for thought. When we're up here like Icarus flying towards the sun, it's always just a progression, mathematical progression. People start looking at. You have seen cash cattle trade higher. You have seen the margins for packers get better. So we'll see. If people keep paying $23 for a steak at the grocery store, where is the demand Got to stop. At some point, if it hits the wall, we're going to have a correction. Again, that's why we have our puts on. That's why we roll them up when we can. Keep a floor, but keep the upside open. And I've been talking for a while now about April lean hogs. They finished up the day at 89.35, up just a quarter cent, up 0.250. Again, if we can get through 90 cent, it's going to be game on. It's going to be a new contract high. It's going to be people chasing it. I think if cattle continue to go higher, that will be supportive for the hogs. You have to remember though, it's a lot easier to rebuild to quickly build a hog herd, and we're already starting to see some of the cutouts trading lower, the hams and so on and so forth. So we'll watch that closely. It's still a great place to be when you consider back in April, these hogs were down at almost at 75 cents. So take it into the 15 cents, and we'll get back at it tomorrow. Tomorrow again, it's going to be a big what if. It'll come out in the afternoon when the Fed chair speaks. This is Chris Robinson. If you're looking for help, give me a call, 312 638 8868. Have a great night.